Talk to some more mid-cap IT managements. In fact, despite of posting a slightly weakish result this time round, Mphasis is actually trading with gains of over 1%. We're joined by Mr. Nitin Rakesh, CEO of Mphasis, and Manish Dugar, is the CFO of the company. Nitin, let me start with you. It was quite a muted quarter, high exposure towards BFSI and telecom, obviously, leading to the miss. Will we see the pressure in the next 2-3 quarters as well? How are things shaping up? What's the outlook from here?
I think the environment obviously is a little bit headwinded, especially acutely headwinded in the mortgage segment. That is what the driver of our sharp decline in that segment has been over the last 2 quarters. As we speak, we believe we are almost close to the bottom of the headwinds there, at least in our business. We've also seen some pipeline pickup in the mortgage segment, specifically in the last few weeks. So I think we're cautiously optimistic that we are going to use Q1 really as a stabilization quarter. Outside of that business, of course, Q4 was a little bit muted given the regional bank issue that happened late in the quarter. And I think we will definitely continue to see some slowness in decision-making and deal ramp-ups. But outside of the mortgage business, in the direct business, ex-mortgage, we do believe that we should see a sequential growth starting Q2. Of course, we have some more work to do to get a better picture of what the remainder of the year will look like depending on the macro. But at this point, we do believe that we should at least be able to give a market level growth in the direct XDR ex-mortgage business for FY24. In other segments, I think for us, the strong growth really has come from clients 11 through 20 as well as new clients. Both of those are representative of the verticals that we've invested in over the last 3 years, namely healthcare, travel, as well as some recovery we have seen in the high-tech stroke TMT business. We're not very exposed to telecom, so it's not so much a telecom issue, but I think the high-tech business took a hit 2022 calendar year, and we've seen some recovery and stabilization in that already.
Nitin, hi there. Morning. Wanted to understand, apart from BFSI, how the demand trends are shaping. What is client confidence looking like?
I think if you look at the pipeline, on a year-over-year basis, the overall company pipeline is still up about 35-36%. Then if I break it down by BFSI and non-BFSI, the pipeline growth in non-BFSI is over 50%. We've also seen, conversion. Even in Q4, we actually saw 2 large deals convert. One of them was over 150 million. The fact that, the pipeline growth in non-BFSI is high gives us the confidence that our ability to continue to grow the non-BFSI segment will also be high. Having said that, it's not that the BFSI segment is not seeing deal closures. We continue to see deal closures there as well. So if I just correlate that data for you, our ability to close deals, we've had a pretty regular clip. We had 10 large deals this financial year. So our ability to close large deals, our ability to generate new deals in the pipeline, both are very strong. And other good news is that our win rate hasn't really changed much. So the fact that we now have an expanded pipeline, as the environment gets a little bit more conducive, we think we'll be able to convert many of those deals that are sitting in the pipeline. So I think the overall demand outside of BFSI continues to be healthy. Of course, in pockets, even within BFSI, we've seen good traction and good uptake. I think it's really the more interest rate sensitive segment of BFSI that has taken a bit of a hit.
Manish, on the positive side, your EBIT margins are flat and held on to the lower end of the guidance. What is the margin outlook from here on and for rest of the FY24?
We had maintained that there is a northward bias to the margins, and quite a few levers came into play this quarter. Operationally, we had been focusing on trying to get the fresher billability up. It is all-time high in the company. At the same time, we were able to pull up the utilization as well. And combination of the two did give us an opportunity to improve our margins, which is reflected in the gross margin going up to 27.4%. Unfortunately, because of the revenue decline, it remained at 27.4. It could have actually been higher. And as you know, that when the revenue base goes down, the absolute value